This is not a theory. This is not speculation. This is a coordinated, legally executed operation that threatens to end the era of United States economic dominance by draining the physical foundation that modern power is built upon. You have been told your entire life that the silver market is transparent, that it operates under the fair and rational laws of supply and demand, that prices are discovered honestly on open exchanges, and that the number you see quoted on your trading app represents reality. But the terrifying truth is that this system is largely an illusion. The People's Republic of China has identified a structural loophole buried deep inside the Western financial architecture, a loophole so powerful that it allows them to systematically extract the physical silver reserves of the United States and its allies without triggering alarms, without breaking laws, and without ever announcing their true intentions. This is not a small imbalance or a temporary market inefficiency. This is a multi-billion-dollar strategic maneuver that is hollowing out the vaults of New York and London at a pace that is mathematically impossible to sustain for more than a matter of weeks. The clock is ticking. The inventories are collapsing. And the institutions that were supposed to safeguard these reserves are either powerless, complicit, or paralyzed by the very system they created. At the core of this operation is a massive price discrepancy that most retail investors never see and are never meant to understand. On the Shanghai Gold Exchange, where silver trades on a fully allocated, physically settled basis, real metal is commanding a premium of 10 to 15% over Western prices. Meanwhile, in the United States, silver continues to be priced on exchanges dominated by paper contracts that can be created in infinite quantities through digital leverage and high-frequency trading. This divergence creates a powerful arbitrage vacuum, a financial gravity well that relentlessly pulls physical silver out of Western vaults and into the fortified warehouses of China. China simply bids higher for real metal. Western banks suppress prices with paper shorts. The result is unavoidable. Physical silver leaves the West and never comes back. This is not ideology, it is mechanics. China is weaponizing Western financial engineering against itself, using the paper market's distortions, greed, and leverage addiction to extract the very raw materials required for technological supremacy and military dominance in the 21st century. Most people still think silver is just an investment vehicle, a speculative trade, or a poor man's gold. That misunderstanding is catastrophic. Silver is not optional. It is not replaceable. It is the most critical industrial input in the modern world. It is embedded in missile guidance systems, radar arrays, satellites, medical imaging equipment, solar panels, electric vehicles, secure communications, semiconductors, and every advanced weapons platform currently deployed by the U.S. military. Without silver, the modern economy does not slow down. It stops. China understands this reality with absolute clarity. That is why they are not acquiring silver for short-term profit. They are acquiring it for control. They are positioning themselves to back a new global financial architecture with physical assets, while leaving the US dollar stranded as a political instrument with no tangible anchor. When the paper system finally fractures, possession will determine power. Internal data from Western exchanges reveals what regulators are desperate to keep out of the public eye. Registered silver inventories, the metal that is actually available for delivery, have collapsed to levels not seen in over 25 years. This means the system is now so fragile that if just a handful of major industrial players demanded physical delivery instead of accepting cash settlement, the exchange would be forced to declare force majeure, a default, an admission that the metal simply does not exist in sufficient quantity. China knows this. And they are pushing the system toward that breaking point deliberately. They are standing for delivery on every contract they can access, while Western banks quietly settle obligations in cash to hide the truth that the vaults are functionally empty. What we are witnessing is a silent evacuation of physical wealth. Thousands of tons of high-purity silver bars leaving Western control under the cover of normal trade flows, disappearing into vaults that will never open to Western buyers again. This drain is leaving the American public holding nothing but digital balances inside a banking system already drowning under hundreds of billions of dollars in unrealized losses. China has accepted what the West refuses to admit. Paper money is temporary. Physical assets are permanent. They are trading depreciating dollar reserves for metals that have preserved value through every empire collapse in recorded history. The psychological operation surrounding silver is deliberate and relentless. You are told silver is obsolete, volatile, manipulated, irrelevant to the modern world. That narrative exists for one reason and one reason only. So accumulation can continue quietly at artificially low prices. Internal communications among industrial buyers already confirm that manufacturers are paying hidden premiums far above spot prices just to keep production lines running. If the public understood how little physical silver actually exists behind the paper price, the revaluation would be violent. Triple-digit prices would not be a bubble. They would be equilibrium. China's silver accumulation is part of a larger BRICS strategy to create a commodity-backed settlement system that bypasses SWIFT, bypasses the petrodollar, and bypasses Western financial control entirely. This is not rebellion, it is adaptation. You are currently trapped inside a system where inflation quietly erodes your purchasing power while the only assets capable of protecting your future are being exported at a discount to your largest strategic rival. Worse still, your own savings are being used by bullion banks to fund the short positions that suppress the silver price. You are unknowingly financing your own financial decline. The arbitrage drain is the smoking gun of a failing empire. It exposes the paper silver market as a mechanism for extraction, not price discovery. If you do not hold physical silver in your own possession, you are holding a claim on a system that has already lost the strategic contest. The speed of this drain is accelerating. Once the final threshold is crossed, there will be no physical metal available at any price. Supply chains will fracture, manufacturing costs will explode, and the same voices telling you silver is too risky will be desperately attempting to acquire it at multiples of today's price. China has already broken Western price discovery by establishing a parallel physical market that reflects reality instead of leverage. The Federal Reserve has no winning move. Allow silver to rise and admit currency failure. Suppress it further and lose every remaining ounce of strategic metal. Internal deadlines suggest that upcoming delivery obligations cannot be met without asset reclassification or customer bail-ins. This is the risk no one discusses. Digital silver is an unsecured promise inside a stressed system. Physical silver is ownership.